everyone. This is Rob Golfi with RE/MAX, the Golfi Team. Welcome to the Golfi Real Estate Show, Hamilton edition with host Rick Zamperin.
We have a barn burner of a show for you today. Yes, Rick here, Rob there. We have a special guest as well. I'll introduce him in a second. Don't forget, you got to call the number one RE/MAX team in Canada. That is the Golfi Team. To get your home sold, 905-575-7700. That's 905-575-7700. The website, robgolfi.com, robgolfi.com. And you can follow the Golfi Team on TikTok, Twitter, Instagram, and Facebook. Don't forget to go online to golfihomevalue.com to get an instant home estimate. And, well, if you have a few $1 million laying around, go to golfiluxury.com and check out some of the luxury homes on the market. Special guest today, Brian Hogman from Mission35 Mortgages is joining us because, well, we had some big news earlier on this week that we'll get to that in a second. But first, guys, how are you doing today?
Fantastic. You know what? This smog that we have from the fires in Quebec, I can't believe this. I don't even think even as long as my parents been in this country, they've been here since the early 50s. I don't think they ever experienced anything like this, Rick. Isn't this crazy?
You know what? It actually reminded me of a terrible... Do you remember the Plastimate fire way back when, about 10, 15 years ago? I walked outside and I was like... It totally reminded me of that when that recycling facility
was that Wentworth or Wellington? I can't remember which street that was.
Yeah, it was down in the northeast
end. Yeah.
Terrible. That was 1997.
Wow. Yeah.
Okay.
Yeah.
You were how
blast from the past.
How old was Brian?
I was on my way to the park. I remember smelling badly.
I'm like, wait a minute. I know I'm older than him. I remember that, but
it was the smell. The smell triggers memories.
Yeah. No kidding. But I really want to get to the stats. So I sent everybody. Yeah. Everybody's going to start getting this in the next 10 days. So I put the numbers out, and on my newsletter, the Market Watch, that people will get in the next 10 days. We put out from the last 6 months of what the average sale price was in different areas. And we also compared from year over year. And can you believe some of the some of the areas that jumped quite a bit since December? In Hamilton, okay, this is benchmark price, right? This is what pretty close to the real numbers. In Hamilton, true Hamilton, in December of last year, the average sale price was $607,700. Right now, we're at $700,000. So the market's gone up $100,000 in that 6 month time. So it's rebounding. But Burlington, oh my God! So in December, we were at $850. January, it even dropped more to $760 average sale price in Burlington, and right now we're at almost $1,050,000 for average sale price in Burlington. So you could have bought something in Burlington in December, January, and probably made a couple $100,000 on that, no problem. And where else was there a big jump? Brantford, in December, $572,000 was the average price. Now it's $686. St. Catharines, $545 in December, and now we're at $625,000 now for the month of May. Niagara Falls, look at Niagara Falls, $550,000 was the average price in December, January. Now we're at $639,000 average sale price in May. Welland didn't have as much of a jump as the other areas. Welland, it was $535,000 in December, January, and now it's $592,000. Oakville kind of stayed the same. See that where the wealthy homes are, they kind of stayed. They kind of flatlined there. And then Toronto, the average sale price. In Toronto, this is the total GTA. December, January was like $795,000, and then now it's at $945,000. Wow. So that's incredible, and it's crazy. So the one thing we did experience though is that new listings. Now we had a high listings that happened in September last year. The market started coming around. So last year, now I'm talking about Burlington. I'm talking about Hamilton. I'm talking about Brantford and Niagara. A total of 2,966 listings were last September. Right now, the month of May, 3,402 listings were listed, and so things are moving along. Like, I mean, we're seeing growth. House prices are slowly moving up, and it's crazy. It's crazy.
Yeah, I think that's a reflection of the confidence in the market right now. I know we're seeing the pre-approvals. They're starting to turn more. People are coming in. They're getting approved again. But it still seems, I still think that number is still a relatively low number.
It is,
though,
yes.
isn't it?
Yeah,
the 3,400 is still low.
We still have low inventory. People are still looking. They can't get anything. So, yeah. So, I feel optimistic for the next bunch of years. And talking about optimistic, I want to tell you a story, Rick. And it's not a bedtime story. So anyway, there's always opportunities out there. And I found, there's this one property that I was interested in, right? And I said, I got to make a move. And I wasn't ready to buy it this year, right? But I'm working on buying it.
Planting the seed.
I'm planting the seed. So I called the person that owned this property, and he wasn't in Canada. He was in Florida at the time. So I left a message, say, hey, I go, Doug, listen, my name's Rob Golfi, and I know you own the property on so-and-so street, and I'm wondering if you were ever thinking about selling it. I'm not looking to list it. I'm looking to buy it from you. And I left a message on his cell phone. I didn't hear anything back. He just, I just let it go. And about a week later, I get a phone call. I'm like, whoa, like I jumped out of my seat when I said, oh, this guy, So I go see the guy, and I said, I'd love to take a tour of the place inside. I wasn't many, many years ago once, but I just didn't remember of this building. So I walk through, and I go, you know what? This is perfect. The location, like I'm talking about, when they say location, 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 well, this has got the location. So I did a walkthrough, and then I'm going, okay. Now,
was it a house? Like a house or commercial?
It's a commercial property.
Gotcha, yeah.
Commercial. So now I got to let you know, I did a purchase on one in St. Catharines, okay? And I put an offer on another one. I'll find out on June 12th if I get it, right? Because if the first guy backs out, then I'm out. So I go to this guy, I go, and this is how anybody can do this. This is where opportunities are come. You got to be proactive. So what I did was I said to him, listen, can you do a year closing? He says, absolutely. I go, wow, because I got two of them possibly happening in the next 6 months. So I need that buffer. I need the buffer. And then I said, would you do a vendor take back? Now, vendor take back means, would you hold a mortgage for a short term, right? Maybe. And he goes, yeah, I can do that. I'm going, whoa. This is great. Something from a textbook from a seminar. Yeah. When you go to a seminar, you ask those questions.
And they say, buy, no money down. No,
that's it. Yeah. So I said to him, listen, I really don't know what the value here is. I said, I'd rather have an appraiser go through it. And then an appraisal on a commercial property, it ranges from $2,500 to $3,500. Yeah. So I said, listen, how about you pick the appraiser and I will pay for it. He goes, no, it's okay. He goes, you get whatever appraisers, because they have to be good about it.
They have to be certified.
Yeah. So I called Colliers. They've got an appraisal company, and I said, listen, I need you to do an appraisal on this property, and just here's the contact to get through there and everything else like that. So that's where I'm at with it. Wow. Now, and whatever the appraisal amount is, I will pay for it, because you know why? I know it's going to be worth double in 10 years.
Yeah.
You know what I'm saying? Like, it will be worth double in 10 years. But the reason why I was asking him for the long closing and the vendor take back, because I'm going to be renovating this building. I'm going to gut it. So it just gives me a buffer where I can use my money to renovate, use his money to hold on for a bit, and then once it's done, I can go to the bank.
You can get a bank mortgage for cheaper.
Right. That's right.
Because the lift will be there as well too.
I just need that buffer for about 6 months. And he's willing to work with it. And
you know what I love about that is that, I was just telling my daughter Lila the other day, it's like, don't take no for an answer until you give someone the opportunity to say yes.
There
right?
You go.
And it's like, you knock on the door, you ask the questions, they might say yes. And in your case, does anybody say no to you, Rob?
I just keep wait. I wait till they say yes. That's all. But here's the moral of the story about this is that this guy, now he's an older gentleman. He's getting up there in years. There are so many of those out there. So many and there's opportunity. These people, they're ready to, you know, let go and go on with their life and get into retirement. This guy's a business guy, and I could tell he's winding down. And so that's the opportunity. Now,
and I like that what you were there is you were fair.
Yeah.
Right. It's not about, I think I see far too often people trying to take advantage of a situation or try to get a deal. But if you're going to pay market value for something and you have a long-term plan for it, fair for him, fair for you. It's a win-win situation.
It is. I'm always in for the long run. And so this guy, yeah. So now we're just waiting for the appraisal. And once the appraisal's done, I'm going to put this on paper. And it's going to get done, Rick. It's, you know, I'm excited about that. You know what I mean? Like it's pretty good.
I'm curious what kind of property it is, Rob. I can't wait to see
I'll tell you once I have it firm. Once I have a firm deal, I don't disclose anything.
Fair enough.
Nothing.
Fair
Everything's a secret out there. I don't want nobody cutting my grass out there.
Let me ask you in our final minute here of this segment, when you made that call, was he actively going to sell the property? Was he even thinking about it? Or because you put that bug in his ear, he thought, yeah, this is an opportunity I could take advantage of?
You know what? I just wanted to put the bug in his ear. That's it. I had no idea if he was thinking of selling or not. I just went in because I said, this is the time. I want this property. And so it's just, you know, I just put the energy out there and I just went and proactive. Like if you go knock on 10 doors, like, or 20 doors, whatever, somebody's going to say yes. Somebody is going to say yes to, yeah, hey, yeah, I might be interested. Let's sit down and talk about it.
Yeah, you just got to do it. You got to go
That's
there and
it.
knock on
Just
the
got
doors.
to go do it. That's
you know?
all.
And you know what? These people out there that have had these properties for a long time, they would have tremendous equity in most cases
big
as well
time,
too.
big
So
time.
if he probably bought it for
It's
25%.
It's paid for. It's paid
Right.
for.
So,
but I asked all the questions. I was being upfront and transparent with him, and he said yes, yes, and yes to everything. So now we just got to deal on price after that. That's it.
Well, if it falls through, let me know, okay, Rob?
You might have a partner, Rob.
That's it. That's it.
When we come back, we're going to dive into the wide world of interest rates because there was a hike earlier on this week. We'll talk about a familiar issue, I'm sure, for many landlords at the Landlord-Tenant Board. We'll also talk about a tall condo that's coming to Canada, and we'll look at some luxury properties that, who knows, if you won the lottery, you might dip your toe into. This is the Golfi Real Estate Show, Hamilton edition on 900 CHML. Okay, we got 16 here.
Cool.
Welcome back to the Golfi Real Estate Show, Hamilton edition on 900 CHML. Rick Samprin here. Rob Golfi is a sales representative with RE/MAX Escarpment Realty, the Golfi team. You can call the Golfi team, the #1 RE/MAX team in Canada, by the way, at 905-575-7700. Find them online at robgolfi.com. That's Rob, GOLFI.com. Follow the Golfi team on TikTok, Instagram, Facebook, and Twitter. And you can go online to golfihomevalue.com for an instant home estimate. We have a special guest on the program today as well. His name is Brian Hogman, no stranger to the show. Brian is with Mission35 Mortgages. Find them in the World Wide Web at mission35.com. Let's tackle interest rates because earlier this week, the central bank, the Bank of Canada, announcing that its key lending rate will increase 25 basis points to 4.75%. And it might not be the end of the story. Coming up in July, there could be another rate hike. And many economists saying, you know, they weren't surprised by this. Many realtors and many mortgage brokers, and you guys can talk to this, might be a little worried on what this is going to do to the market. Or maybe you're not worried at all. How do you guys take this news?
Yeah, the chatter out there was about a 50-50 split, like a coin toss. Before Wednesday's announcement, you know, half the camps were saying quarter point, half were saying a wait. But everybody did have the consensus that we were going to see rates rise by September. They were meeting yesterday. They were going to meet again in July 12th, and they meet again in September. So the consensus was there was definitely going to be a hike, just not sure if it was going to be this soon. I think the unfortunate part is that the world that we're living in right now is that it's a lagging effect, right? So when interest rates go up, so a fun fact for you is that probably only 35 to 40% of Canadian mortgage holders right now have been affected by the rising rates because the other 60% are still sitting in a sweet fixed term at maybe 2.5%, or the other ones are in what we call a static payment variable. And what that means is that when the variable rate changes, their payment doesn't change, but the time it takes to pay off the loan changes. So for those people right now, there's a lot of them are sitting there going, oh man, well, my payment stayed the same, but now it's going to take me an extra 5 years to pay off my mortgage, or 10 years. A lot of people don't think about that, if I'm being honest.
Right.
You know, you're just thinking, can I make my monthly payments? You know, we're not thinking that far ahead. And the lagging effect of this interest thing, which concerns me a little bit, is the first indicating factor when we're going to start to see defaults. And we haven't seen defaults yet. Defaults are at historic lows. Historic lows. In fact, defaults on mortgages today could double, and we'd still be below historic lows. So that's good news. But what we do see ticking up now is unsecured credit. And what that's an indication of is, you know, when your payment goes up a little bit, people still tend to spend money. And we can see that because the inflation numbers came out high, GDP is high. But what does tend to happen is that unsecured credit starts to go up. So it will be interesting to see what the future numbers come out, because we thought we stamped down inflation, but as we saw the last number came out, it ticked up. GDP came out, that ticked up a little bit, and everybody's working. Like unemployment is low, so that's why we're seeing what we're seeing right now.
Well, everybody's having a hard time finding people to work, and also the quarter point, I don't feel like I didn't get that much feedback from people saying, hey, you know what, I don't know. People are still buying. Now, if there is another quarter point going up in a month from now, get pre-approved at this lower rate. Now, but the other thing is, I still feel that the confidence level is up there. This is the interest rate that most buyers buying now are kind of accustomed to. They know this is what it is. This is, you know, nothing you can do about it. And it's going to float around in this number between 4.5 and 5.25, I think. And I know it seems like a lot, because before, when interest rates were higher, prices were lower. Now, even though house prices are climbing up, I had a feeling that they were going to increase it because to slow inflation down, because house prices were starting to climb again. Yeah. And this is not going to stop. I'm going to tell you, this is they are bringing 1.5 million people into this country.
That's a great point.
And it's just not going to stop. If they bring it up to 10%, maybe that might slow it down, but then we'll get used to the 10% and people will start buying again. But
you hammered that point really good. And a lot of people aren't talking about the effect that immigration has on rates, right? Yeah. You bring 1 million people into a country, they're not coming in with nothing. You know, some people may have less, but you're bringing people in the country that do have resources. Those resources are getting spent. If you have 1 million more people in the country spending money, prices are going to go up. Yeah.
And usually immigrants, I'm going to tell you, they're the best savers of anybody out there. They don't have the Gucci purses and all the nice fancy, cars and they don't eat at McDonald's or whatever fast food. These guys bring a brown bag. These guys do not pay. They don't go to restaurants. They don't buy coffee every single day. They bring their own coffee in a thermos. I'm telling you, they are the best savers. And that's why these immigrants are buying houses within 2 to 5 years when they get here. And that's what's going to drive housing prices up also.
Yeah, it's an interesting anomaly right now, and I don't know what the answer is, but I agree with you because the housing prices look like they're going to continue to go up because jobs are continuing to be formed, and if the inflation, it's one of those things that, of course people get affected with rising interest rates, but as we can see by defaults, they're still making their payments. One thing I'm encouraging people to do right now too is when you talk about rates, the variable rate moves, but the fixed rate doesn't move in direct correlation. And one thing for people to be aware of, if this stuff's giving you anxiety, I talk to people every day and I can't sleep. It's not what's most important to time the market. It's what's most important so you can, in my opinion, have a little bit of financial health in your life as well too. If you're awake worrying about rates, you should lock in. You really should take a lock in because you got to end up focusing on your life instead of focusing on the interest rate. And you know what? We saw fixed interest rates as the variable rate hovered. The fixed interest rates dropped by almost 0.4%, then went up 0.5%. So about 3 weeks ago, you could have locked into a 5-year fixed rate at 4.85%.
See?
And now the fixed rate is up again, and it's going to be hovering around 5.25, 5.14. So I think it's important, if you do have that mortgage coming up for renewal in the next 6 months, 12 months, 18 months, 2 years, be aware of it.
You know what? I'm not worried too much about it myself. Look, I firmed up on one deal. I'm waiting for another deal to see if I'm getting on Monday.
You got a couple in the hopper with VTBs
I got a couple
now. We know that too.
Yeah, and then I mean, these interest rates for commercial too is higher than your residential real estate.
Very true. Yeah.
But I'm not worried about that too much though. Like it's not like, you know what, business is business no matter when you're doing it, right?
Well, I agree. And here's the thing, right? Like I think rates are high because people are making more money than before. Inflation is high and people are working and GDP is high, right? So that means that people can afford it. And when we look at the default rates, they can. Are there people that are going to get affected? For sure. You've got a few over-leveraged investors, people that weren't good with their money or come across hard times. But I think, Canadians are resilient. They always pay for their homes. Like number one thing, like they will eat Mr. Noodles, the hydro will go off, but I will pay my mortgage is kind of the Canadian battle cry.
Yeah, just a couple of things I wanted to point in on. Number one, the mortgage default level. I think I heard Finance Minister Chrystia Freeland the other day say it was 0.5%, which is minuscule. And to the variable versus fixed, my wife and I were in a variable, and while we could make our payments, we thought, how much more is this going to go up? Let's lock in now, give us some peace of mind so we're not worried about it. Not that we were extensively worrying about it, but each and every time the Bank of Canada would come up and we would be talking about, the rates are going to go up again. That means our payments are going to go up. So why not have a little bit more security or at least stability in terms of, that payment level? But I also want to ask you, Brian, a question about, the interest rate, because they raised it only 25 basis points, a quarter of a point. Why not go with a more robust interest rate hike, a half a point, and remove that kind of lag effect? Would it have that effect?
Yeah, that's a great point. I think that it's a great point. It's kind of like dumping a bunch of chlorine in the pool to shock it, right? And I think if you were to increase it by a half a point, you'd shock the pool. No one would swim in it for 2 to 3 days, depending on how much chlorine you put in there. But then it would be clean. I think the Bank of Canada is just a little bit gun shy on doing any robust moves because they got severely criticized for raising rates too late, right? So now I think, bless Tip Macklin. I wouldn't want to be in his shoes by any stretch of the imagination, but, damned if you do, damned if you don't. Raise it by a quarter point, no one likes you. Raise it by a half, even more people don't like you. You leave it the same, nobody likes you. And I think this was an indication to say, hey, we're not done yet. We're not gonna whack you over the head with a hammer yet, but we will if this continues. And I think that's the message that they're sending.
But in the U.S., isn't their interest rates 2% higher than ours? Am I correct about that?
I'm not sure if it's 2%, but I know they are higher. They kept hiking when we paused.
That's right. I know that they're a lot higher than we are to slow inflation down. So, and they're not doing the immigration for the population of their country versus the population of ours. They're not bringing as many immigrants as we are. Like our percentage based on 33 million people in our country, 35 million.
Our percentage is way higher.
Way higher of the amount of people that we're bringing in versus the U.S.
And what I was going to say, Rick, to your point on the fixed versus variable rate there and locking in, for people who are concerned about it right now, I would end up saying you can go to a bank, mortgage broker, go to your lender, and you can say, what's the best fixed rate I can get today? And lock it in for 120 days. You have to send your application, do the full approval, lock it in for 120 days. That gives you 2 more rate cycles to see what happens, right? So you lock it in, where are we, June, July, August, September, October. Say, okay, I'm going to lock in this rate for 5.25, whatever it is, for October 1. Now you get to sit back and say, okay, I got that peace of mind. Maybe I'm still paying higher for the next couple months in the summer. But in July, if it goes up again, well, that's a great option, great solution. And then if it goes up again in September, you're like, hallelujah, sign it up, let's close that deal, right? But if there is change, because the numbers that come out every month, it's like a roller coaster, especially as a mortgage broker. CPI came in high, that's going to change the expectations. GDP came in high, that changes expectations. And these numbers come out every week. It can be a panic attack trying to keep up with all of them, but that's a great way just to hedge your security there.
When it comes to the housing market, we're at 4.75%. What is the number you think would really force people to take pause to say, I don't know if I want to jump in or sell my home and maybe move up? And what do you think that number is? Is it 6%? Is it higher than that?
Well, right now, like the prime rate, the 4.75 is what the bank sets it at, but the actual Canadian banks use a number of, that's a premium to that. They're at 6.75. right? So then, or they're at 6.7, went up 6.95, right? So that number to me, you're below 7. I think that number, which will give pause to think, if it starts to go above 7 to 8, that's
you're going to see a change in the market. Housing prices will start coming down and level off to a point. So
the other thing I was just going to say is because right now we're at a point where the stress test still has meaning.
Oh, right.
Because if I was qualified at 5.74 or 6%, and if I have a variable that's 1 point off of prime, I'm paying about right at the tip or maybe a little bit above of what I had to be qualified for. As soon as we start to go above that, people weren't stress tested for that number. So that's where I think you'll start to see maybe some cause for pause.
Mm-hmm. By the way, the U.S. Federal Reserve rate is 5 to 5.25%, so a little bit higher than what we currently have.
Yeah.
Let's move over to landlord-tenant disputes because number one, this is nothing new. The pandemic has really created a backlog, a major one, at the landlord-tenant board. And there's a story out of Mississauga, and this is, probably been replicated in numerous places across the province, maybe even across the country, and how this individual was renting out a space, a bungalow in Mississauga, to a woman during the pandemic, and lo and behold, she has $18,000 in outstanding rent. So he takes her to the landlord-tenant board to say, hey, we got to fix this issue. The board finds that there was an error that the landlord made about the rental period. So while she was forced or is being asked to pay back this unpaid rent, this landlord cannot evict this individual. The individual has been ordered to pay back $35,000 in unpaid rent, in fact, but she can't be evicted, which is mind-boggling.
You know what bothers me about this is that, okay, you fill out an application to the landlord-tenant board. Okay, maybe you have the day wrong in your application, and because the day is wrong on there, they basically will say, oh, sorry, or something, just one little thing. But just, I was talking to Brian here. He says it's the principle of the thing. You owe this much money, just pay it. And that's the problem with the landlord-tenant board. You know what? And this is what's driving people. So, like, this is no different than Madoff doing the Ponzi scheme and taking people's money. And this guy has been doing it for years. And then he goes to jail. Well, I think tenants or landlords, whatever, if it's a bad tenant, get them out. 30 days, you get out. If it's a bad landlord, not doing his job, not doing repairs, he should get fined. I believe in that 100%.
I agree.
But they're allowing tenants rob the landlord, which is baloney, and it's hurting the ma and pa people that want to do an investment for their future, and they should change that. And I know they added more adjudicators to help with the speed of this thing, but they're not doing enough of it, and it's crazy. Well, look what happened. We don't know the story that happened on Jones Road in Stony Creek. Okay. A 57-year-old man comes out with his guns and he killed 2 people. I don't know the story about that, but a tenant can drive a landlord to a point of so much frustration, to a brink that will drive him crazy because it's his financial, it's his investment. And so this has got to change.
Well, and I think you changed the name because I don't know why it's called the landlord-tenant board. It should just be called the tenant board. Because there doesn't seem to be anything for the landlord there. And to your point, I've had this exact same situation happen to me with my investment properties, and it's changed our process. Now, instead of, because I had the same thing happen, and I filled out, you're supposed to give a certain period of time when you serve your paperwork, and I was off by a day. Okay. The principle was that the tenant still owed money, but what happened to me is do not pass go, do not collect 200, go back to the beginning of the line, Mr. Hogben, and start again. Now I have to hire a paralegal every single time that I do this, and it's an additional cost for the mom and pop investor.
Let me jump in because I have a question about this, but we'll get it on the other side of the break here on the Golfi Real Estate Show, Hamilton edition on 900 CHML. All right, 6 minutes. This is the Golfi Real Estate Show, Hamilton edition on 900 CHML. Rick Sanford with Rob Golfi, sales representative RE/MAX Escarpment Realty, the Golfi team. And our special guest today is Brian Hogman from Mission35 Mortgages. Find them online at mission35.com. Looking to buy or sell your home? You got to call the #1 RE/MAX team in Canada. That's the Golfi team, 905-575-7700. Online at robgolfi.com. That's robgolfi.com. To this landlord-tenant fiasco, for lack of a better term, the average wait time for landlords to get even in front of an adjudicator is 9 months, 2 years for tenants. But here's the question. For those who are looking at homes, condos, whatever the case is, for an investment property, they're hearing these horror stories. I can only imagine that many of them are saying, I don't want to deal with that. I don't want to create a space in my home to rent it out. I don't want someone living in my home and not paying the rent. Are you guys hearing the same thing on the street?
I think bad stories are great water cooler conversations, right? And I think anytime you have these situations, it's what everybody's going to talk about, right? I never heard someone at a party say, hey, Brian, I bought a rental property. They gave me 12 post-dated checks and I cashed every single one of them. That's boring.
Yeah.
Right. but the reality is that, out of all my properties pre-COVID, I remember being terrified thinking, oh my God, Doug Ford saying don't pay. And I remember sitting my wife going, this could be very bad.
I was there. I was scared.
And you know what? One person out of about 50 people that I have relationships with, out of 50, did not pay. And that person was already scheduled for eviction March 30th of the COVID pandemic. Yeah. So all that, now that was a catastrophe. I had to wait, more than 9 months to get my money. But majority of people, for people looking to get into investment property, my thought process is, don't do it on a shoestring. It's good to have a little bit of, backup just in case, whether it's a line of credit, some cash, because these things can happen. However, they do not happen the majority of the time. They're a small percentage of the time.
Yeah, like the majority of the people are good. Yes. And you know what? And we all have war stories. There's no doubt about it.
Good stories.
Yeah, they're fun after that they happen. But as they're happening at the time, it's not fun. I'm telling you, it's not good. My son Phil, first investment property, boom, right out the gate, he had a bad one, and he had to deal with it. But he was able to evict. And now, back in the old days, before I was a realtor, I owned properties, and you know what I used to do? I used to show up at their house at 6 in the morning, knock on their door. Yeah. By the third day, I mean, it wasn't harassment, or maybe it was. I don't know. But 6 o'clock in the morning, you
weren't bringing coffee at 6 in the morning. I bet.
By the third day, the kids said, "Mom, pay the damn rent." You wake up the whole house. But I would, you know what? But back in the old days, that was old school. Yeah. And you know what the problem is? Like, if you're not going to pay the rent, leave. Okay. Yeah. But now I'm going to tell you something. You renters out there that don't want to pay the rent, once you get evicted, good luck finding a place to rent that's going to be cheap. I'm going to tell you, because you just went into the pool. You went, because as soon as a tenant leaves an apartment, the next tenant that's going in is paying a lot more money on that unit. True. And so but these people, karma does get back to them. I'm telling you. And the problem here too, Doug Ford's got to change it. Got to change the landlord-tenant board, and he's got to make it quicker so that people don't lose money. This is robbery. They're robbing you.
Well, and I think too, for those landlords out there that are having this, I found this the hard way, but I think people are getting, because I used to just be grateful that somebody left and move on with my life. Now we will sell the debt to a collection company. Yeah. And what a collection company does for the smaller landlords out there, they'll buy the debt for 25 cents on the dollar. You still lost some money, but you got a little bit. But what they do more importantly is they're going to register something on their credit report, right? That takes time, resources, and energy. Mm-hmm. And if you are going to be that type of tenant, guess what? All landlords now are checking credit reports. Yeah. All landlords are doing significant due diligence now. So really, yeah, you may have got someone and it may have worked really well in the past, but I think landlords are getting increasingly savvy to do things like this so that that type of tenant is not going to be able to keep replicating that process.
Good luck getting a car loan or getting even a mortgage down in the future. If they say, hey, well, listen, you didn't pay your rent. Like, what's the story
there?
Well,
and then on a mortgage application, if we see those collections on a credit report, got to be paid before funding, right? It's a condition. You had, whether it's a gym membership for $200 that's in collection, or it's a rent for $3,000 or $4,000, whatever, got to be paid before funding. So
they definitely have to change something about this. And because I had a bad tenant, and actually I was going to create a site. Well, I actually did, but I didn't. I put it up for a couple of days, but I guess you can't do that anyway. But indicating bad tenants, and you know what I mean? Like these, like you can't, like they're ruining people's lives.
I think here too, and you know what? You get great, we've talked about this, Rob, a bunch of times. Real estate has changed my life over the past, 15 years, being able to invest in real estate, having a long-term goal, being able to get excellent returns on investments does not come without some risk.
Yeah.
Right. And where there's risk, there is significant reward. Right. So do I think these risks coming across 1 out of 10, 1 out of 20 bad tenants is worth the upswing over your 5, 10, 15-year investment career? Absolutely, without a doubt. I wouldn't change a thing. I would do it again and again.
No. Well, if you're 20 years old and you have a tenant like this, boy, they can bankrupt you real fast.
Well, then you start again.
If you want to sell your house or you are in the market to buy a home, call the #1 RE/MAX team in Canada, the Golfi Team, 905-575-7700, online at robgolfi.com. That's Rob, GOLFI.com. When we come back, we're going to talk about the tallest condo tower in Canada. It's coming to Ontario, but not Toronto. Learn more next here on the Golfi Real Estate Show, Hamilton edition on 900 CHML. Not Hamilton, no. 6 minutes, here we go. And last go around here on the Golfi Real Estate Show, Hamilton edition on 900 CHML. Rick Samprin with Rob Golfi, sales representative, RE/MAX Escarpment Realty, the Golfi Team. They're the #1 RE/MAX team in Canada. And call them today at 905-575-7700, online at robgolfi.com. That's Rob, GOLFI.com. And you can follow the Golfi Team on TikTok, Instagram, Twitter, and Facebook. Our special guest today, Brian Hogbin from Mission35 Mortgages, online at mission35.com. There is a huge condo tower that's up for construction. At least the idea is being planted in Ontario, but not Toronto. It's a 77-story, 224-meter high tower that's going to hold 962 residential units. It's going to be the biggest condo tower in Canada, and it's going to be in Niagara Falls. It's called 77 Niagara, and it is massive. Is this good news for Niagara Falls?
I think it's good. It's hard to tell. I bet you a lot of people that are looking for investment properties in Niagara Falls now, will the hotels allow them to do Airbnb? Probably not. They're not, because it's going to be a hotel condominium, I think.
Right.
And I know that it's at the, they say it's going to be at the corner. It's going to be at the corner of Robinson Street and Allendale. It's 1 block over from Stanley Avenue. It's one, and I think it's 1 block over almost from the casino, Falls View Casino. So it's not that far. I even looked at the property where it's going to be. I saw, the guy's been he's been accumulating land. He's piecing it together, and so I mean the underground parking has to be huge with that many condo units. So definitely they're going to have a beautiful view of the falls, which is what people want, and I think it's a great thing, but it's pretty optimistic. I mean, are they going to be able to sell this? I mean, the population is not that big, so I think they're looking to get probably more out of towners to buy in there. Maybe like a weekend, like wealthy people coming there, like a
secondary home. It's like you get your cottage in the falls kind of thing.
Yeah. Will investors jump in on it? Because that's what drives the condo market, the investors, and then they sell it 1 or 2 years later to homeowners, people that are going to live there. So somebody's got big pockets for this. Like, I mean, they've probably already got millions involved in building this, like the drawings and going to the city and proposing this and everything else. So I think it's going to be a great thing, but I think it's going to be, I don't think we'll see it up for at least 10 years.
Yeah, especially with the Airbnb, like you said, Rob. Yeah. If you can't, like as an investor, if I couldn't do that, it might be hard to cash flow based on just putting a annual tenant in there.
And then if you look at the population in Niagara that are wealthy, that you go, okay, well, how many people are earning X amount of dollars and more? Well, in Toronto, in 1 square acre. I mean, there's a lot of people earning a lot of money. They're buying condos, but in Niagara Falls, like, are you going to get those Toronto people buying those, properties as investments.
Well,
I don't know.
People go down to Vegas a lot, right?
Yeah.
Does Niagara Falls, in your opinion, have the Vegas allure? Like someone from Toronto to say, hey, I'm going to spend, I don't know how much they are, $400,000 or $500,000 to have my weekend retreat in the falls?
I don't know if they do it in the falls. That's the thing.
I don't know.
They'd probably just go to Vegas, to be honest.
Yeah, fair.
Yeah. You know what? You got to put shows on that people will go there. Like people love Vegas because it's Sin City basically. So you can go there.
It's a whole nother episode.
That's right. But
it's a different podcast.
It is. But I think they'll do okay. But I think half the building will be the hotel, and will the hotel be on the upper part or the lower part? It's hard to tell, and it's hard to tell what cost per square footage they're going to charge. There's going to be they're going to try to sell this thing, and they're going to try to sell it to investors in Toronto. And if it's too expensive, it's just going to sit there. And I see if this thing does go through, it's 10 years from now.
Yeah,
we'll be talking about this in 10 years and say, wow, they actually did it.
Yeah.
So, because this is a big project for Niagara Falls.
Yeah.
Absolutely. Lastly, and we got about a minute to talk about this, golfiluxury.com, and there is a listing on this website, Rob, as you know, that has a mega price tag to it.
Yeah. So we were looking to see what the most expensive house in Canada right now on 24 Park Lane Circle on the Bridle Path, and it's being built right now. It is $40 million. If anybody's got $40 million that wants to buy a house, just give me a call.
Or if they need a mortgage, we're happy to help that too. So.
Give us a call. But that's the most expensive house. Now, a lot of these high-end houses do not make the market because there's a circle of billionaires and millionaires out there that's super wealthy. Sometimes they know each other, and then they do the deals. But this one right now is on the market. If you go to my website, golfiluxury.com, and hit worldwide properties, you can go to any country in the world, any province or state in the world, and you can actually categorize price point that you're looking for. So you go to golfiluxury.com and then hit worldwide properties, and there's people that have that link. There's only about maybe 2 or 3 people in Ontario that have that link for the worldwide properties. Cool. So if you want to check it out, check out golfiluxury.com and you'll see it.
Does it have a pool for $40 million?
It better.
It better. You can listen to our show online through Spotify, iTunes, Google Podcast, Stitcher, and many more. Just search for the Golfi Real Estate Show in your favorite podcast platform. Hit the follow button so you never miss an episode. Thanks for listening to the Golfi Real Estate Show. We are back next Saturday at 9 on 900 CHML.